Hello traders, hope you had a good day, a good week, or if you didn't have a good day or a good week, then you will find strength and energy to stand up and continue your journey. So in this video, I want to show you how I approach the analysis through these 12 points, and also so these are short points, and long they are like interpreted in my trading plan, which we will not touch in too much of the detail right now, but this will be maybe a start of a small series or just a video in itself. I think you will be able mm, to use concepts and ideas that I will share here in any kind of a strategy, because this is more about overall context of the market and its clarity, and the fact that the market is tradable and is worth watching at and taking some risks. So hope you will like it, and let's start. So first point is high time frame, middle time frame, and lower time frame ranges. So again, about ranges you can learn more in the course, which is available at the home like chapter on my YouTube channel, and you will have basic trading course and advanced trading course. They are free. They are really complex. I mean, not complex in terms of hard, but complex in terms of the questions that they give answer to, and any kind of the concept that you are not familiar with is here. Or if you are lazy to look through them, you can ask in the comments and I will send you an answer. But also I will make short like reminders of what is a range, what is a model, and so on. So what is a range is so the most simple way is just to use an indicator from MentFx that will show you with these numbers and with these gray lines the boundaries of the ranges. The ranges is levels of price expansion, price impulses, which make a structure of the market. And the rule here is that when we have an impulse like this, so we need a candle close above the previous level to make a new high, a new structure, and then we need some kind of significant pullback to say, okay, this is a new range. And as you can see here on this chart, and this example is I'm taken from the history for the more easier explanation, but again I think I will backtest additionally, and maybe I will make more analysis, so this template will be applied and could be applied to any market, any time frames. So my high time frame is like 3 days, and we see that we are in the bullish range. As you can see, the market has broken here. So yeah, bullish for a higher time frame. Now what about middle time frame? Middle time frames are 1 hour, 4 hours, etc. for me, and we can see that we are basically in a bullish, again bullish range here on 1 hour. So bullish range. How it all developed, it was bullish, bullish, bullish. You see 1, 2, 3, 4, 5, 6, then went 1, 2 to the downside and 1 to the upside. So right now with these pretty simple actions, we know already some basic confluence that we see in front of us, which is bullish daily range structurally, and inside here we had some bearish shifts, and now 1 hour shifted to the bullish side again. And then entry time frame is 5 minutes for me, and 5 minutes, as you can see, also bullish here. We have 1, 2, 3 bullish ranges. Now we need to do the same thing for high time frame models and middle time frame and lower time frame, and we need to connect the confluences between these models. So models are much more complicated concept compared to ranges, but in short, again, if you are not familiar, please go through the course. But in short, we basically have four models in the market: accumulation of orders, distribution, reaccumulation, and redistribution. So accumulation is when we see that the market is doing something like this. So it's moving back and forth. More often it's horizontal movement, and so what we see here is the last break to the upside, and there are some other factors that go into models, but let's just keep it simple. And yeah, so this is a bullish model, and distribution is the same, but just it mirrors this one. So reaccumulation is when the market started to move out of this accumulation and starts to have some kind of a direction. So it moves up, but on the way up, the market will face a point where it just can't continue in consecutive ranges like we have here. 1, 2, 3. It can make even 7, even 10 or 12, but sooner or later it will make a break, structural break to the downside, or even 2 breaks. And at this point, we don't say that the trend changed, because we understand that here there was an accumulation, and now we are in a trending environment. And the nature of the trending environment is that it will and should have these flushes, or like resets, or reaccumulations. So in this point, when we are in a bearish range here, simple range, we are in unconfirmed reaccumulation. But in the moment we break back above and we are in a bullish range, so something like we saw in 1 hour before, we now know that we are in a reaccumulation, and redistribution is the same. So let's see what we have in terms of models on the higher time frames. So first of all, on monthly, we have, so as you can see, you have this reaccumulation here on the indicator. And why reaccumulation? Because we had bullish shift, bullish shift, bullish, bullish, and then 1, 2 shifts to the downside. And now this one is still unconfirmed because the month is not ended, but basically at this point this is confirmed reaccumulation, which is a really bullish sign. Same goes on weekly, but here we can see several cycles of reaccumulation. Why several cycles? Because we had a market that moved to the downside, then 9 consecutive times to the upside, as you can see here, then 1 time to the downside, then again to the upside, to the downside, and to the upside. So this was a local accumulation because the market went back and forth for some time. Then it created one more cycle of reaccumulation, which was confirmed, and just continued, and then 1, 2, 3 to the downside, 1 to the upside, to the downside, and to the upside. So this is a classic accumulation, as you can see here. A classic accumulation which is confirmed and which is moving to the upside. So again, this is bullish sign. So we have confluence between models on monthly, weekly, plus ranges are also bullish on daily, 1 hour and 5 minutes. So we have a lot of bullish confluence. And of course, this is an example of a clear market. Then later, so again, it's not the topic of this video, but I guess you might start to see that when you are analyzing the markets from this perspective and different time frames are showing different ranges and showing different models, then you understand that it's not the market that is worth taking a risk. So let's look at daily. So again, in order to not go too much back in time, let's just start with here. Basically, we can start with here. So what we had is the market that moved to the upside and created this unconfirmed reaccumulation at this point, and then confirmed it, but never managed to go to the upside as it basically should. And of course, we have the influence of this prior distribution and redistribution here, but again it is becoming more complex, so let's just focus on some limited part of price action. And then later it basically what it did is it confirmed accumulation. Why this one is showing accumulation here? Because we had consecutive upwards shifts that are going from the accumulation, as you can see. So let me redraw this one. So I made this redrawing, and as you can see, so this is a classical accumulation. I mean, not like so classical and so template based, but it is there. So we have a market that is moving back and forth, and then starts to move up. So for example, if we will have a shift to the downside right now, it will be unconfirmed reaccumulation, which is still bullish side. So we have daily pretty bullish model and pretty clear. Then 4 hours. 4 hours basically tells us the same as daily, but in more details and with more cycles of reaccumulation. So we clearly see that there was accumulation here, the market that is moving just back and forth, not holding anything, and then starts to hold and creates this local reaccumulation, and then starts just to go and create first cycle of reaccumulation. Then we have like 1 2 3 4 5 1 2 to the downside and continuation. So second cycle, third cycle, then a local accumulation here, and a new cycle of reaccumulation. So this kind of cyclic price action can continue for a pretty long time, and especially if it breaks itself with longer time accumulations. But even if we are talking about pure reaccumulation, it can go easily to 7 cycles like this in a trending market. So right now we have unconfirmed reaccumulation here on 4 hours, which is not perfectly bullish, but combined with monthly, weekly, daily, and 1 hour, which is at this time confirmed reaccumulation. Why? Because 1 2 4 5 bullish shifts, 6 bullish shifts, followed by 2 bearish shifts, and now 1 more bullish shift. So this is very, very bullish sign. And of course 5 minutes, same thing. So 5 minutes is not in a perfect spot, but combined with other details. So why I'm telling that 5 minutes is not in a perfect spot is because we have this price action here. So fractally we have this bearish shift, and I mean, of course, we have all the bullishness that on the higher time frames, for which this bearish leg is nothing. But if you imagine that we looked at this price action somewhere here, so the foundation below the price is really, really bullish, and here the foundation is like is bullish, but it's more bullish from higher time frame context. And yeah, it's not like perfect, but again, you rarely can meet like a perfect situation in the markets, especially if you're analyzing through different lenses and through different instruments. I mean, instruments like accumulation, reaccumulation, ranges, and so on. So overall, we have like a full confluence between ranges and models. So first 6 points are really bullish for us. Now we need to discuss the quality and the clearness of what we see in the markets. And let me quickly remind what is a clear and high quality impulse, supply and demand zone, and so on. But if you want to see more examples, please go through the course. There you will find separate videos that will show you what is a high quality impulse, high quality zone, and so on. But now a quick recap. So here I will just show you this text. You can look through it and remind yourself of what is high quality and lower quality structures and zones. But also I wanted to say that, of course, right now it seems like a long and complicated process, but when you gain experience, you will do it almost automatically and really fast. So you could be able to do basically all analysis in a minute or in 2 minutes, including all of these factors. It's just they become ingrained in your mind, and you can really do it fast. So this clear structure, clear S&D, and what is basically chop, and also some context quality levels. Again, please refer to the courses for more information, because yeah, this video is more about bringing it all together. Yeah, so this was the quality, and let's see this on the chart actually. So let's start with daily. So do we have a clear last range? Yes, definitely this is a clear range. So we have acceleration on the break. Nothing is stopping this momentum in the middle, like almost full body candles here. Again, you don't need to have perfect price action. Good enough is good enough, basically. S&D zone here is not that good. It's just a hidden S&D. It's just regular, let's say. It's not bad, it's not too good. Better zone would have a look of something like this, you know, of this down candle. But yeah, but we have, yeah, but it's pretty clear. And now concerning models, so what is the negative of this model that we have here is that for me, when the market starts to move, okay, it will be an overextension. So overall, it's also pretty clear. Yes, it's not perfect, but it's pretty clear. So we are not trading like even here, you know, or here after first bullish shifts. Market already showed some bullishness, liquidated, and continued. So the model is pretty clear on the higher time frames. On the middle time frames, it's even more clear. Why? Because the market shows us different cycles of models, and it supports itself. I don't like this latest price action though, because it looks pretty illiquid, and I mean not so illiquid but pretty choppy, you know, like this is pretty choppy, wiki. Then we had this flush out, and then this big impulse to the upside, and I like to trade more calm wave like price action like this. But overall 1 hour is not looking good, is not looking too good here. So again, it's more about question of a chop, which will be discussed a bit later. And entry time frame model and ranges. So range is a bit overextended, definitely. So we moved pretty far away from the EMAs. For example, compare this one and this one. So this one lost its integrity, you know, it's just overextended. And really often the market starts to do something like this in the overextended ranges. So the quality of the ranges and models is just okay. The most important part is that we have a lot of confluence, bullish confluence between ranges and models on different time frames. Now let's go and see if we have a chop in the price action. So chop can be based on can be MA based. So what is MA based chop? Is when MAs are looking something like this. So no direction, you know. So maybe a good example will be here. So let's look. So you see, it's just constantly going back and forth, and not creating these really nice curves, but it's moving like this, like this, and continue. So this is MA chop. Then we have a range chop is basically again here. So not clear, wiki, not holding themselves. So technically, you see, technically we have this structure that is holding itself, but look how it develops. Like really not nice. Candles are wiki, not full body, just going, just not showing any momentum and so on. Yeah, so let's see if we have this choppy price action. So this is pretty clear, so no choppy. Compare this price action to maybe this one, or something like I don't know, maybe this one. So pretty choppy, pretty wiki, and here you see we don't have too many wicks except of maybe this one, and overall it's all holding, it's all showing itself up. Now if we see MAs, then here we see how it looks like choppy, back and forth, and then starts, so a bit choppy, and then starts to show some really nice curves and so on. So MA is okay, candles are okay, ranges are okay, models are more or less fine. So no too big choppiness. Now overextension based on impulses, ranges, models, and MAs. So daily is not is a bit overextended from MAs. So the most optimal position would be a bit lower, so something like this. 1 hour is not too overextended, but the problem here is that MAs are sloping to the downside, and usually we like to see MAs that are moving to the upside, and then we enter with the flow. But still, that's fine. And 5 minutes, so at this point we definitely had overextension, and now we came back to this to this 20 MA, but the distance is unusually big for the market. So what we can expect, of course, we can continue from here, but it's better to avoid this specific range and wait for further development of price action. And based on structure here, so I like to trade no more than 5-7 consecutive shifts. So for example, if you see, we have 6 consecutive shifts on daily time frame structurally, and this is still fine. But basically, if this number was 10 and you try to enter here, you need to realize that the more consecutive shifts you have, the more chances now the price will reset itself, and this is overextension. So we don't have it here, we definitely don't have it here. So we had like 6 like we have on daily now, then reset, and now first one, and on 5 minutes we had 3, so no overextension. So now S&T chains, build-ups, clusters, and 2.0s. So when we have these chains and build-ups in the market, it means that the price is supporting itself, and sooner or later we will have a new nice impulse. So a quick example could be here. So we have a price that is moving and supporting itself through these fractal zones, as you can see. So the price, as you can see, like supports itself in this kind of a chain and moves higher. Again, more about chains, build-ups. So chain and build-up is actually the same. Cluster is when you have, so for instance, this is not a cluster. Why? Because the price went up and never reached to the deeper zones, to the most deeper zone, and never mitigated all the candles in the range. But if it did, then, and for example, we had a new break, so this will be a cluster, because this previous range was created from a range that mitigated everything in it. And so the price basically have no reason to come back lower, because everything is mitigated and we can be more sure that it will hold itself up. So yeah, following this logic, so unfortunately this one is not that clear, but basically these are fractal clusters, because especially here, so we have all the candles mitigated here with this last unmitigated wick, and yeah, this one is mitigated, this one, so this could be a cluster. Yeah, and let's look at our chart. So we had here development of these ranges. We have this build up here, as you can see. Then we have absorption, which we'll discuss a bit later. And then we didn't have full mitigation, but here we had like full mitigation of this range. And then cluster, as you can see, so full mitigation, and basically, so yeah, it's not technically a cluster here we have, but it went from clusters and created clear moves. So we have some buildups. We don't have too much choppiness. On 1 hour, right now we don't have any kind of buildup. If we look here, it's just an impulse, which is, by the way, pretty overextended. So here we should wait at least for some kind of pullback and so on. And on the 5 minutes, we had this buildup here, which then just shoot it to the upside, and now we expect a bit more of a flush out and continuation to the upside. Absorption is just another concept which I will just keep it for now for simplicity, but as you see, sometimes you have a zone, then the market starts to move below it and then move to the upside. So this is additional factor to show you where the orders are and what side is supported. Yeah, and confirmation is our ICI, impulse correction impulse. So again, I know this price action, so this is just Asian ranges and so on. And yeah, now we have, as you can see, 1 2 3 4 5 reaccumulation cycle, and now possible reaccumulation here. So let's see what's happening. Yeah, and I guess this one could be an entry here. So we have full confluence, as you remember, from daily, weekly, monthly, 4 hours, 1 hour, everything is pushing to the bullish side. And now our entry time frame shows us some foundation in form of local accumulation plus cycles of reaccumulation 1, 2, which is now confirmed, and our confirmation is impulse correction impulse, which is again you will know from the course and a lot of examples here, but this one can be considered a nice ICI inside a range, inside of confirmed reaccumulation. So again, even if it's a loser, you know before you have a result that this is a good trade, even if it's a loser. So the price just holding, yeah, takes us out, but again, that's not a problem. We can just wait a little bit more for more entries. Let's just rewind the price. Yeah, so some entry possibilities, let's just quickly examine in the hindsight. Maybe it was here for a break even or a loss, and like a real good possibility was here. So this is a perfect entry. We have impulse correction impulse correction impulse here fractally in a confirmed reaccumulation, and so on, followed by a big impulse. Okay, so this is an example of how you can do a deep analysis. Many concepts are taught in the course, in the free course on the YouTube, so please feel free to check, and I will do other analysis later and maybe backtest. Okay, have a good day.